Welcome back to my YouTube channel. Today I am going to discuss about investing in index fund. The index is hovering around 18,300 points. Probably it is resting because last 2 years almost it has been in a range bound situation, and chances are it will give a breakout any time and it will go up. So what should to do in this stock? Normally what we see is even though you pick up a stock based on your analysis, some stocks perform good, some stocks have negative return, and in totality you land up getting less return on your portfolio. Index fund, for those who don't have time and still want to get advantage of the equity market, could be a very nice way of investing. He can invest in index fund using SIP and relax. It is sure to give you return over a long period of time, and that is what I am going to talk today. So remain engaged and understand the intricacies of index fund investing. Investing in index fund. Now the very important thing is an investor like Warren Buffett, who is supposed to be beating the market, he opines that index fund could be safest way of investing for average investor. He says consistently buy an S&P 500 low cost index fund, keep buying it through thick and thin, means all time, especially through thin. Like when it falls, you should keep on investing, you should not lose interest. It is stated by Warren Buffett, and he has gone a step ahead and mentioned that after his death, he has instructed his trustees to put 90% of his estate into an S&P 500 index fund for the benefit of his wife. Now look at these statements. These statements are very powerful. Over a period of time, it has been seen that nobody can consistently beat the index. So mutual fund is a safer way of investing, but if you invest through mutual fund, at times some funds perform better, at other times it performs lower than the index fund. So in a long period of time, it tends to average out at index. So therefore, it makes a lot of sense to invest in the index fund. Now, what it means by investing in index fund? So typically, index is a collection of so many stocks decided by the stock exchange, and there is a definition of index. So I'll take you through that index definition. Now, Nifty 50 is one of the Nifty index, and it has got 50 stocks and their weights are listed here. Like Reliance Industry has 10.84% weight, SDFC Bank 8.27%, ICICI Bank 7.94%, and so on and so forth. And Bharat Petroleum, which is at the end of 50, listed 0.38%. This means if you put 100 rupees in Nifty 50, then around 10.84 rupees you are putting in Reliance, 8.27 rupees you are putting in SDFC Bank, and 7.94 you are putting in ICICI Bank, and 38 paise you are putting in Bharat Petroleum Corporation, and other stocks as per the weights. So what it means is that top 50 stocks in our country you are investing, and these stocks keep on getting out and in of Nifty 50, which is decided by the exchanges based on certain definite criteria. So therefore, it is very important to remain invested and do a periodical investment, because nobody can time the market, nobody can beat the market in long run. There have been only few individuals in the history of investing who have done better than market, Mr. Buffett being one of them, and that is what he says. He understands the intricacies, and therefore he suggests that after his death, most of his corpus should go to an index fund, which becomes a safe investment and return come to his wife and children. Now, let me take you through Nifty 50 performance. Nifty 50 performance which we discussed. Nifty on 1st Jan 91 was 375, and today it is closing at 18307. So if you compute the CAGR for this period, which is 32 years, it comes to be hopping 13%. So if somebody invested at this point and left it or slept it without looking at and analyzing what is happening, still he got 13% CAGR, which is a lot of money. and therefore it is suggested that you must invest in index fund periodically. So you may decide. I'll tell you how to invest at the end of this video, but before that I will take you through another data point. These are some of the index funds which are available in the marketplace. Now look at here. If I do a similar fund from mutual fund, and I choose any category of mutual fund, you will see some negative return in this area. But here, all the 1 to 5 years and 10 years return are all positive. This is the beauty of index fund. So if you want to reduce variability of your return, index fund is one of the safest way of investing. And since we can't time the market, it could be very prudent to start investing in index fund through SIP. So I personally like HDFC Sensex ETF, and you can choose even HDFC Nifty ETF, or you can choose UTI. You see, if you look at here, there will be hardly variations of return. There will be a little bit of variation depending on the expense ratio, but generally it will be about 13 to 14%. And therefore, if you want to bring home the net 13% return without paying any tax, without having moderation of booking profit, without getting into brokerage commission from time to time, index fund is the safest bet. And I would suggest for youngsters who have 30 years to retire or 20 years to retire, should make a periodic investment in index fund and then let it grow over the 20-25 years. It may not be monitored, and at the end of that time you will see that you bring home a very hefty return. So friends, what you have seen in this video is index fund is one of the safest way of investing. So, and then also I talked you should pick up any one of them, or you can ask your investment advisor to help you out. And you can set a SIP. The way to set up a SIP, that also I'll speak to you. Particularly for index fund, what you should be doing is, let us take, you have 10,000 you are setting aside per month. Then what I would suggest is start investing every week about 2,500 into 4, which makes 10,000. You can choose any day. It could be Monday, Tuesday, Wednesday, or any one of the day of the week. And on that day, 2,500 rupees index fund gets bought by you automatically. So now if you keep on doing that for a couple of years, like let's say 20 years, 30 years, I have not calculated that, but at 13% you can calculate, it will be a hopping return, hopping amount which you can bring it back. I'll certainly calculate and put it somewhere, or maybe I put it in the description box, and that number will really surprise you at the end of your retirement time. So if you want very nice sleep, if you want to be peaceful sleep and risk-free return over a period of time without bothering about analysis, without bothering about devoting time in equity return, start doing a SIP in index fund and have a great sleep and wait for a great corpus at the end of the day. Thank you so much for your time, and if you like this video, do circulate to your friends and relatives using your social media platform. And if you have not subscribed so far, please do subscribe to the channel. Thank you so much and stay engaged.